afternoon. Dave Putz here from JKP Holdings. Alongside me, as always, Mr. Nathan Turner. What's
Hello,
up?
hello. Good.
Oh,
We're chatting so much, we almost chatted right into our intro here.
yes. Good conversation. That was always fun. But yeah, I'm like, oh crap, oh crap. So I'm glad I connect here with you guys. For those who are watching, tuning in, hopefully it's not your first time, but this will be recorded. It's probably our most asked question we get. So we've been doing a lot of things lately and kind of shifting gears. We're just talking to Bob, if you call it the green room, whatever you want to call it, about how the market's shifting and how that we just saw the fact that some non-performing loans in the Fannie level were trading at upper 90% of UPB. That's crazy. I mean, but they must have really cheap money or some game plan that you and I aren't playing yet.
Yeah, we're sitting here trying to figure out, so just trying to run some rough numbers based on what we know. How does that work? Like, even if your money's at 2%, margins are slim, but if you're talking hundreds of millions, maybe that makes it worth it.
And the mortgages are 3, 4, 5%, interest rates that to get a 10% return, you're discounting a lot. These guys are buying it almost at par. So it's crazy. So I apologize for over speaking some people, just finishing the conversation up, and hopefully those who are tuning in can understand the stuff. So what we've been doing a lot lately in the last 2023 has been a mission to understand the seller finance world, and also understand where notes are at, wrap notes, subject twos, owner financing, and just embed ourselves in those kind of those groups. And we just connected with another group this past week, had an awesome phone call with another group that does similar stuff. So stay tuned. We'll be hitting about a bunch of that stuff up. And in the coming weeks, we'll also have some reverse mortgage talk and some more people who've done from W-2 to owner financing. So it's be exciting.
Yeah, it's really cool. It speaks to kind of the variety within this niche. Yes. So we've got mortgage notes as kind of the umbrella, and then you're talking about reverse mortgages, seller finance, performing, non-performing, seconds, institutional versus seller finance, creative finance, wraps. There's so many different directions that this business goes that it makes it really fun and really interesting all the time. It also makes it really possible to be able to pivot at any given time. If we were doing non-performing for years, and now the pricing has just gotten so out of whack that it's hard for us to justify that direction. Where now seller finance performing notes become a much more attractive asset class.
Yeah, and it's funny because we talk about this a lot. I think people get a little confused because I still heard today someone mention, buying an ROI. Everything's really based on buying on that interest rate, right? That's the driving force behind all of this. It's really difficult for us to buy on a low interest rate situation. If you're originating a loan and you're listening to us, please don't write it 6%, right? If you can, if the borrower is able to do it. Again, if it's owner occupant only, if it's an investor, you can write whatever you want to write at. But for us to buy it, it has to be a large enough interest rate, or we're going to discount you based on the return we're looking for. So.
And it's still a question we get all the time. Like just on this call this week, these are guys that have been doing this for a number of years. They're not brand new to this business. But the question we get is, what percentage of UPB?
Yes.
Well, it depends. What is your interest rate? And that was our first question back to them. Well, what's the interest rate? And that's the number one determining factor on what that discount's going to be. So write it at a high interest rate. You've got a smaller discount, and we can do a ton of business.
Yeah. And I think people get lost in that because they think other ways. And I don't know what the focus is on that is, because it goes back to, percentage UPB. It doesn't matter. ROI doesn't count. It's yield, IRR kind of equations. Yeah. And that's what we talked about. If the big pools are selling, they sell at a percentage of UPB because it's an easy number to use, but they're really looking at the interest rate and seeing what the return is, because your interest rate's your return, right? And you have to discount the principal enough on lower interest rates to get the interest back up, the return back up. If your interest rate's real low, you're gonna have to drop your discount on the balance alone to get that return. So
yeah, we're always looking at yields. So learn how to use the financial calculator. Dave's wacky spreadsheet, but learn how it works.
Yeah, you
so
got to
we know
use
what we're talking
something.
about. Yeah.
Yeah. If you have a question about that, feel free to reach out to us. Nathan used the manual calculator. We have some spreadsheet stuff, but either way you're doing it, make sure you understand what those numbers mean, how to use them, and what they mean, how do they interact with each other. That's a huge thing, right? And it's funny, we got in the space decade plus ago. We were focused on bank loans, and we still, we bought bank loans up to the most recent days, and we've shifted over to the seller finance, where the grandfathers of this, this investment strategy bought seller finance notes, flipped over to bank, and then flipped back, right? That's what they did for years. They focused on buying seller finance paper.
Yeah, and we're lucky enough to have one of the legends in the business. Bob's been around forever and ever. Well, I don't want to make him seem too old. We'll get him on here. He can tell us all
about Bob, welcome, man. How are you?
I'm good, guys. Appreciate you having me. And Nathan, you caught yourself just in time about been around forever and so long, and the grandfather, and
yeah. So, Bob, for the few people who are tuning in, maybe there's 72 people who have been tuning into us. Who are you? How'd you get into real estate and notes? And keep it under 4 hours, because
yeah, well, if I went through every year, it would take 4 hours. But actually, my very first job out of college was consumer finance. So everybody should have to be a debt collector at some point in life. I always say you should be a debt collector and work in a fast food restaurant. As long as you've done those two things in your life, you'll appreciate whatever other job you end up getting. So that started off in the real estate, and then I was in the banking world. 1990, I entered the seller finance space, as you mentioned. I went to work for Metropolitan Mortgage out of Spokane, Washington. At the time, they were the big dog in town, and worked with them. And 1997, we moved to Dallas to work at the Associates, which was, again, another big firm. And then in 2001, I went to work for Bayview. And a lot of folks probably have heard of Bayview, and I worked with them for 12 years. And then I came over with Colonial Funding Group and Eddie Speed, and we started our capital fund in 2013. And we, like you said, we've been in the seller finance space for over 30 years. We have bought bank paper. We bought deals from hedge funds, and but our true core is still seller financing.
Has seller finance changed over the years, or is it just evolving? What have you seen?
That's a great question. I don't know that it's really changed a whole lot, other than to your point a minute ago about a lot more sub twos and wraps. We'll say quote unquote professional seller financiers as opposed to just mom and pops. Back when I started in 1990, it was, you would find somebody who had one property and sold it and have one note, and that was it. And obviously it was much more important to find folks that were generating multiple notes, so you had lower marketing costs. So you find somebody who would buy property, fix it up, do some rehab, build a portfolio of that type of property, and then buy in bulk. So but it's crazy. We were talking before we jumped on about interest rates and cost of funds and stuff, and interest rates now are pushing 8%. We still see somebody do a seller finance note at 6%. I'm like, why are you doing it less than the bank will do it? Just, that's not the thing. So it's always been a really good access to private capital for folks that either don't want to or can't get bank or traditional financing.
I remember back in my university days, I took business, and we were talking about pricing. About pricing whatever goods you've got or whatever, and the line that stuck out and kind of became sort of a legendary quote was, "Don't try to compete with Walmart. You're never going to undercut Walmart." And we're seeing people doing that now, where they're trying to compete with Walmart with the banks. Like, no. The banks are offering what they're offering. You've got a premium product, so charge more.
Yeah. So when you've gone through this process of buying it, what are kind of some of the stumbles that maybe people who are watching, who are creating it, who've been in the space maybe a year or two, that you've seen that you say, don't do this kind of stuff with originating notes?
Don't go after the broken, desperate person to be your borrower, right? I mean, there are a lot of, and we refer to them, on the note school side as like penalty box buyers. In other words, there's nothing wrong with them, but the credit availability right now is so tight in the underwriting and the rates are higher, people can't qualify. There's well-deserving borrowers out there that can be homeowners. You don't have to chase somebody with a low down payment that can barely afford to make their monthly payment. You don't have to market to those people. So if you're creating notes, find good quality borrowers. To your point earlier, if you're creating a note to sell it, right, you want to find a good borrower and you want to write it at the right terms so you can minimize your discount, right? Yep. And you guys were talking about percent of UPB, and it's all about the yield. I do want to just differ a little bit on that, because there is some opportunities, especially in the reperforming space, where you got a low rate and a long term, and all right, well, all of a sudden you're going to get a huge discount. So you got to balance discount with yields. We'll buy below our yield requirements at times if we know we're buying a big enough deal and we got like an 80, 90, $100,000 discount. That loan pays off in 5, 6, 7 years, your yield's going to jack up anyway. So we always try to balance that discount in there, which really comes into effect on, deals over 150, 200,000. All of a sudden, then you got a good sized discount, even if you're buying at a high single digit yield.
Yeah. Because most time people don't go 30 years, right? You have a exit in 10 years, your yield just goes through the roof. You're absolutely right there. Yeah, exactly. Well said. So note school, right? This is something we've all heard about. I think, Nathan, you went through it years ago. Tell us a little about, for those who are familiar with it, what is note school?
Well, let me step back just a little bit. When I first started in 1990, I met Eddie Speed when I was working at Metropolitan Mortgage. And Eddie was, a loan trader. He was a broker. He would buy for his own portfolio, and he would sell to institutional investors like Metropolitan and then Associates. When I moved here to Texas, his office was pretty much right down the street. So I got to know Eddie real well, and he developed all kinds of seller finance programs for companies like Home Investors, how to create notes that institutional investors like Bayview would buy. And from that, he created No School as an educational piece, initially to teach people how to find notes so they would send it to him, so he would have a continuous marketing source, right? And they can make fee income and so forth. And that's grown to an educational platform where mainly somebody who, let's say, has a corporate job, maybe they're looking to exit that and they have money in their 401k or in their self-directed IRA, and they're looking for a retirement, they're looking to invest in passive income. And it's evolved over the years to creative financing and MPLs and that kind of stuff. But it's basically how to, build up a passive investment portfolio. And No School's probably been around 20 years now. So that was Eddie's baby when it started, and he still promotes that and does 3-day classes and teaches a lot of people across the country how to buy assets and partials and so forth. Let me tell you a real quick story on partials. So when Eddie first started, he worked for his wife Martha's dad and his business partner in Mississippi, and they were buying and selling notes. Well, they were selling notes to a finance company down there, and they would go to the company, and it would be a 30-year note, and the company would say, we can't buy that note because our machine, it was before computers or however they tracked it, would only go 15 years. So they were like, okay, well, we'll just sell you part of the note then. And that's really how the whole partial thing, they would buy the whole note and only sell part of it because the Finance America couldn't figure out how to amortize something more than 180 months. So, and now all of a sudden, you guys are morphed into partials, and that's a great way to, to your point on some of the lower rate stuff, to hide the discount is, you got a 6% 30-year note. Well, all right, well, I'll buy the next 10 years and it'll revert back to you after that. And, it's a win-win. They get capital back and you get a good cash flow for a period of time.
Yeah, that's amazing. Awesome.
Yeah,
So-
Eddie's was the very first class I took back in 2009. I
Wow.
was looking up, we were creating notes. I didn't even know that's what they were called. And we were looking for an outlet, looking for some way to resell these, some way to capitalize. That my thinking was, you can sell a turnkey rental. Surely you can do that with what we're doing, whatever it is that's called. So I found Eddie online somewhere and went down and took his class and blew my mind. You know, all of a sudden I started realizing this is a bigger thing. Went to later that year, went to Noteworthy down in New Orleans, and again blew my mind. Eddie was there again, and just there's 200 people.